Welcome back, everyone. I hope you had a refreshing break and were able to network as well. Fund administration for alternative assets is set for substantial growth, with global assets projected to reach, lots and lots of trillion dollars by 2025, driven by increased institutional investor allocations and a rising interest in direct private deals. Innovations in products and strategies, along with demands for fee transparency and customization, will push asset managers to outsource more functions to reduce operational costs and meet investor expectations. It will continue to evolve from providing traditional back office services to creating cutting edge solutions. Our next panel will delve into reimagining fund administration for alternatives. It's an exciting topic with many implications for our industry. Let's get right into it. Please join me in welcoming our panelists, Ms. Leelavathi Naidu, partner at IC Universal Legal, Mr. Amit Kothari, partner and COO of Alpha Alternatives Fund Advisors, Mr. Ajit K. Menon, Group Chief Operating Officer at Vivriti Group, Mr. Vinod V, Chief Operating Officer at PGIM India Asset Management, and Mr. Hemal Mehta, CFO at Edelweiss Alternate Asset Advisors. Please give a round of applause for our panelists.
Good morning, everyone. Thank you so much for joining us today. Today we have a set of very interesting and varied panelists with us. We have Ajit from Vivriti, who deals with performance credit. We have Hemal, who has done all sorts of credit. We have Vinod, who has transitioned from a retail segment of mutual fund and moved to AIFs. And last but not the least, we have Amit, who does the most complicated of the category, which is long short. Since you guys just had refreshments, I want you to give a big shout to the panelists, please. A big one. Thank you. So I have a cutoff by Aditya, so we will, without much ado, we will quickly begin. The host just said that we are about to reach trillion, most, or whatever number she said. But AIF has reached the commitment size of 10 trillion. It took mutual funds approximately 2 decades to reach this number. The experts who say that we will reach this number in the next 4-year marks of 50 trillion, which is today what mutual funds are standing at. AIF has seen a very significant growth in terms of its numbers. And I'm sure while there is a lot of pressure on the fund managers, the operations team and the fund admin team equally has been holding on to that grill. So I'll start with you, Ajit. How has been your journey in terms of fund admin services?
Thank you, Leela. So I think the esteemed panel previous to this were very articulate in enunciating what really the challenges were. Right. I think I'll take a leaf from there because this is bespoke and the journey has not been smooth. So what we did at Vivriti, and I don't take this opportunity to market my manufacturing prowess as a manufacturer of products, but what we did is we realized we actually tested for the first couple of months to find out whether there was a product available in the market which would actually help meet our requirements. The answer was no. There wasn't a one-size-fits-all approach when it came to private credit, investing into debt, and because the fund managers were innovative, they would come out with structures which would be innovative, etc. But when we would look at offering, the offering would be more from a monolith kind of a background, which is 20 years old. Mutual fund industry is where it came from. And a lot of retrofitting was happening. Nothing wrong in retrofitting, but what happens is when you don't think in first principles, the retrofitting fails because then you will have some things not really adding up, some things falling apart, etc. So what we decided is to build something of our own. And that's what we do today. And I worked very closely with Srikanth and his team. And I think a super agile, super humble team which enabled what you see today. Exalt is also a culmination of a lot of feedback that has gone through over the last 24 months. And that's what you see. And I think we were one of the first funds to actually get migrated into this platform. So it's always been a very techno-commercial sort of a space which required me to work with the fund admins themselves for this to make happen, because we can't go the whole mile ourselves.
Thanks, Ajit. Over to you, Hemal, if you can add something more about it.
So, sorry, excuse me, because I've got cold, so I can't speak loud. But see, I just keep telling my team that probably this is the best time to get into fund management business, because the industry is evolved, the fund administrators have evolved, and probably there are much mature products which have now come through. Of course, if I have to tell you about my journey 15 years back, I think there wasn't anything like an X-Alt. There wasn't anything like an application available for this industry. A bespoke application today, at a click of a button, you can actually onboard investors. Everything is digital. So I somehow feel that guys who are just starting in this industry, probably this is the best time to enter. It's something like, when you go on the roads and you say that, okay, probably after 5 years you should be in Mumbai, because probably all the metros will run and, the underground will start working. It's something like that. So probably this is the time to be. But yeah, the industry is still evolving, and hopefully applications like X-Alt and few others will catch up with the industry and its needs.
Thanks, Hemal. While we spoke about the significant AUM growth, now if you see, the AUM growth is no longer about performance. Now when you talk to your LPs, they are more interested what value you get on the table to me as a customer. The same thing, statement of accounts and every other thing is every other manager is providing me. So over to you, Vinod. How has been your experience in terms of a fundraising journey where customers do have some demands? And do you think the current fund admin services are all geared up for these challenges which customers are posing?
So for me in particular, I think our journey is like less than a year old. We got into the Cat 3 AIF segment quite recently. So, but at the same time, we are huge beneficiaries of all the work that Ajit and my other colleagues would have done. So, and I heard Ajit talk about X-Alt. We in the process of getting onboarded on that. And that's essentially a manifestation of how the industry has evolved to manage scale. Okay, we all know it for a fact, and I was just hearing Leela carefully when she spoke about the asset management industry growth or the mutual fund industry growth. If you actually go back into 1965 and start calculating the first 20 billion USD accumulation in the industry took 40 years. And then the remaining 500 billion got accumulated over a 20-year period. So that's the kind of growth that has happened, and we should not at any point in time discount the efforts that go into creating this kind of a value for clients where the fund administrator ends up having a very core role to play. Having said this, I think as some of my other panelists mentioned and what we heard in the previous panel, I think the onboarding experience has been great. Okay, if I am to take a guess, about 90% of my customers would have come digital, right? So, and all of it is thanks to what has happened on fund administration. A lot of more distance to cover, if I may put it so, because if you were to look at a global fund administration structure, it's a lot more being done by the fund administrator under one roof.
So we predominantly are into the derivative space. So we were the first ones to start commodities also in the AIF category, and the local futures and options for our clients. And the clients have shown a lot of interest and a lot of enthusiasm on these products also. Needless to say, given derivatives highly leveraged and all, so governance has been the key aspect which our investors have been looking at in terms of how is the risk being managed, how is the compliance being managed, who are your service providers in terms of fund administration, do they have the adequate talent, and as simple as what is the attrition ratio at the fund administrator level, so on and so forth, are the things which we have seen institutional investors and local investors have been asking for. They're also increasing their allocations to alternate space. So these are the pertinent questions which they have been asking, and we've been trying to address during the course of due diligence and all. So I think it's predominantly the mindset, the people, the talent, which is creating a differentiation in their mind when they look at funds and all.
Thanks, Amit. While the topic today is reimagining the fund admin industry, it goes without a question that we need to also figure out how are we flattering ourselves when you talk about global administrators. So my next question is to you, Hemal and Amit. You guys have set up multiple funds in multiple geographies, work with multiple admin team. Can you throw how your experience is way too different from the way Indian administrators manage the fund and the way the global administrators look at the fund admin?
So I think in the offshore jurisdiction, I think to have a fund administrator rather, is a compulsion, to be honest. Because the regulation also requires, and also the global LPs require, because after the fund manager is the fund administrator who basically is looking after the dollars for the LPs. In most of the cases, the LPs also once a year or maybe once in 3 years come down and actually meet the administrator and also understand the processes, the checks and balances they have. Domestically, we've not seen something like this where there is an expectation of the LPs to actually come down, talk to the administrator how things are being functioned. There is one other peculiar thing globally what a lot of large LPs do. They basically want to have, say for example, there is a banking transaction. They also want to have signatories from the administrators alongside the fund managers to actually pay out dollars, do investments, or whenever there's a distribution which happens from the fund. So one of the persons from the administrator is also holding the fort, who's also responsible to manage the dollars for the LPs. So I think there's more ownership when it comes to global fund management from a fund administration perspective. Domestically, still, we see fund administrator as only a service provider. I think this is like an extended arm of the fund manager, and maybe we have to look at it a little bit differently, because the sole reason somebody goes to a fund administrator is to get economies of scale and at the same time feel that possibly they are our own team. So it has to be evolved yet, but I think there is quite a bit of difference between the global administrator versus the local administrator here today.
Thanks, Hemal. Amit, if in case.
My experience has been predominantly in Mauritius, Singapore and India, as well as a part of India called Gift City. So globally, we have seen that the fund administration role is quite wide, as simple as putting up the real estate for the fund manager, to setting up the fund, to culling out risk report to the fund manager on a daily basis, facilitating liquidation of the fund, obviously the routine stuff of SOA and accounting and all those things, but advising on tax front, entertaining client queries and servicing the clients. So there is broad spectrum of activities which the fund administrators have been doing it, and the process is quite robust there. Obviously, we deal with large guys there, so maybe that may be the reason. But both in Mauritius and Singapore, we have seen that things are quite streamlined, quite structured, while they're costly, and they don't do anything bespoke for us. On the India side and Gift City, I think we have come a long way. There is good chemistry between the fund administrators and the fund houses. They are building up technology, investments and all. But I think still, while we believe they are our partner, they are equal stakeholders, because investors want segregation between the fund management activity and the mid and the back end activity. So we believe that they are our equal stakeholders. But I think there is a lot of scope of enhancing the services, capability, turnaround time, investment on talent front and all.
Yeah, thanks, Amit. My two bit of it would be, I've always seen that in India, the fund management comes first and then the service providers come, which is the fund admin services. Globally, I've always seen they're part of the structuring transaction. And that's how they do have the skin in the game, because they are in the starting phase. They know exactly how the fund documents were drafted. They help you get the lawyers on place. They help you draft the documents. They exactly know how to go about with the things. I think that's a long way to go in India, because the way SEBI has been seeing the service providers, it's an outsourced service, and they can't be a part of the skin in the game. And I think that makes all the difference when you look at a global administrator and when you look at India as a piece. Moving on to it, we go to the most sensitive topic nowadays, because every one person who gives a single pie asks for a side letter, Vinod. So how has a fund admin, because it comes with a lot of obligation, right? Like for a single investor, you give them an MFN right, you give them a huge MIS data system, you literally open up the fund for them saying that, okay, I have every privy to have those information. How are you coping up with this, and is it systemized? Is the fund admin able to help, or you guys need to do something over and above it?
So one caveat first, we do not have a GPLP structure with us. But having said that, I mean, for the limited reading that I have done, and I know that this is a contentious topic when it comes to the regulator, I think it needs to evolve on both sides, both on the side of the manufacturer and on the side of the regulator, because this is not to be, I mean, the AIF industry is not a public market. Okay, so there will be those decisions that will have to get taken, and I would imagine that when an investor is cutting a large check, he's entitled to seek protection and have his own risk management controls in place. At the same time, the regulatory viewpoint is parity of treatment, and we all recognize the fact that the AIF industry is still at a fairly nascent stage. I think a lot of regulatory direction, if we have to look at what has happened in the last few years, is probably borrowed from the mutual fund industry, and probably that may not be the right thing to do in the context of this industry. I'm sure there is a lot of discussion and a lot of advocacy happening on this subject. I am hopeful that we will get to a good place on that.
Thanks Vinod for this. Hemal, do you see any difference when you onboard an Indian LP like a SIDBI, SRI, versus a global LP like an ARIA or a World Bank, and the negotiation skill in terms of side letter, which creates a very different dynamics for you from a fund admin side?
So I think SEBI has been quite vocal, and if you look at their circulars, it's very clear that they don't want to encourage side letters with whether it's a small or a big LP. I think they want everything to be transparent, to be told to all the investors in the pool. As far as the offshore funds are concerned, there are practices where there are side letters with investors, where there are special rights or maybe opt-out structures which are prevalent in the offshore jurisdiction. Having said that, I think we all know that our regulator is much ahead of the curve in terms of investor protection. So I think from a transparency perspective, in a way it is good that all these side letters or any MFN clauses which we have are disclosed to everybody. And if any investor has any issues with it, right up front, it is being countered and questioned and maybe put to address. Offshore, I think things are different. Globally also, if you look at the US market, which is the largest private equity and private debt market, it has always been the case that some investors have been given special rights because the kind of check they get in. And because of that, I think it's an acceptable practice for the other investors also that maybe there could be such side letters prevalent. But having said that, as long as it doesn't actually create any issue for the other investors, because at the LPAC level, certain things are disclosed. And when the other investors know about it over a period of time, I think it's an acceptable norm that there could be side letters and MFN clauses given to certain cherry-picked investors. So that's the key difference between the domestic and the offshore piece right now.
Thanks, Hemal, for this. Now, I think most of the crowd over here will resonate with me. The most painful point in your life is valuation. With the way SEBI transitioning from disclosure of valuation to saying that now you need to go back to mutual fund, and now again doing a recircling back to believe that a mutual fund is not the correct structure for valuing, and now you should shift to IPEV. Let's hear from the fund admin team, Vinod and Amit. How has your journey been? And because every regulatory change creates a lot of implication on the operations, because it's not as easy as like a click of a button, I'm sure, about the valuation piece and the reporting piece which comes along with it. If you can throw some light as to how your experience and how are we coping up with it?
So our experience has been simple because it's Cat 3 listed equity. So we take closing prices. That makes it a lot easier for us, right? Having said that, I mean, there is recognition, and I know that there was a consultation paper and some part of it manifested itself in the SEBI circular that came through earlier in the year. CAT 2 to me will always be a challenge, will be a challenge in the sense of you will never be able to point a finger to whether the valuation is exactly what probably can get determined scientifically. Somewhere there has to be recognition that valuation is an art. Okay, I mean, beyond a point, I mean, you apply all the scientific quantitative measures, but beyond that, it has to be an art, right? And you are operating in a space where you do not have price discovery happening naturally. So in that context, recognize that fact. So long as you have the checks and balances in place, I would imagine that it is good. We will learn through the journey. It's probably pretty much akin to how fixed income market in the asset management industry used to work in the past. Okay, so there was an element of subjectivity. Today we have a mechanism of polling and collecting information and making it available publicly. I think the regulators are taking some of those measures in the right direction. I know that there is an advocacy happening on the subject, and hopefully we'll see some common ground we get on valuation. On valuation, I think the bigger issue is because of the flexibility available or the lack of a very scientific way of doing it, the industry should be a little guarded about not ending up offering a poor client experience. I think that's the piece that we would be more concerned about.
Amit,
So I think valuation per se, as he said, I agree with him. It's a combo of science and arts, and it's not a new topic per se. We've seen institutions, including banks, mutual funds, AIFs, and all, have invested across both on the liquid space side, illiquid, and all. Ultimately, I think it is, and there are various methods. We have seen that there are books, authors, regulations talk about how one has to value things, whether it's a debt or a private equity. For us, predominantly we are into the liquid space, as you know, derivatives. So we have a closing price and all, but we also run few credit funds, and there is always a challenge because along with the debt, there are put and call options as well as warrants and all, and there are some conditions precedent to exercising the call and put. So it's quite complicated. We take help of experts and overlay our management discretion in terms of what the reality would be, and take forward decisions on valuation so that investors are comfortable with the way we do things. Yeah, but it's complicated. It's not as easy. Yeah.
Thanks, Amit, for this. While double-clicking on what what Vinod just said, Hemal, you have been part of a lot of advocacy happening with the regulator. Can you pass on some tips as to exactly where the regulator is heading?
Sure. So I think the latest confusion around valuations, I think all of us are grappling with. So there was a circular which came up 6-8 months back which said that, look, alternatives also needs to do their valuation similar to what mutual fund does. So it was like, one brush paint all types, without understanding the fact that AIF investments are very bespoke. There are some differential rights. There are so many covenants while you underwrite a particular transaction. Whereas in a mutual fund, even if it's a debt mutual fund, the rights are very limited and most of the instruments are listed. So they would invest into listed NCDs for that matter. Whereas in an AIF, we can see that there are a lot of non-listed or unlisted securities which one would subscribe to. So I think to say that, let's have mutual fund regulation regulate AIF was one misnomer, or maybe it was a mistake which I think the regulator understood. Hence, they again recirculated this to the industry and said that, can you guys come up with further solutions around this? So I think that is still under discussion as we speak. Hopefully, and we've done some representation recently, and that is going to go to the regulator. What we've said is that for listed securities, maybe that's the way, but mainly for unlisted, and even if it's listed but not traded, it is important to have valuations done looking at various parameters, and it cannot be that the mutual fund parameters can be used here, because in mutual fund you have to the likes of the rating agencies, the CRAs, to actually do it and then an average of 2 or 3 CRAs, they come up with a number. Whereas in an AIF kind of structure, you will hire one of the topmost valuation agencies who will look at various parameters under your document and then would come up with a DCF or net realizable value and will come up with a number. And typically they don't give you a number, they give you a range. And basis that range, then you in your valuation committee or in your own judgment will come up with a number which will be between that range. So definitely that is quite different to what the mutual fund currently is doing. And the AIF needs a separate regime, and of course there is a separate regime, but as far as valuation is concerned also, we need to understand that it will be always different than the mutual fund industry. And hopefully the regulator will hear us once we submit this proposal to them.
Hemal, just a double clicking on your point, you said there are a lot of factors for valuation, which is where the customers get very jittery about, right? Like there are a lot of human interventions. Is there a possibility you see in terms of SEBI and the fund admin team systemizing it or digitalizing it, or will that human factor always be an intervening factor?
So in plain vanilla investments, certainly you can digitize, you can have solutions around where you plot the cash flows, which you're going to get over a period of time. These are contracted cash flows, and you can run a discounted model using a particular discount rate. I think the crux of the matter lies in what discount rate you need to use, even if you automate the whole model. So you will have to understand and maybe go to the experts in the market to actually get that discount rate, because it depends on what industry, what trajectory, which part of the life cycle of that investment it is. So I think valuation beyond a point, I don't think you will be able to digitize it, because there will always remain a human element, and I think that is the only piece where AI may not intervene, hopefully. Yeah.
Well said, Hemal. Now we move from valuation to investors. Over to you, Ajit. We see a lot of human cry about accreditation status. The last number that I could hear after 2023 easing out for accreditation is just 245 investors. Why do you think it's not picking up? And do you think a good accreditation status will help AIFs to grow over a period of time?
Yeah, so I think your granular ticket size is the focus, right? So that's one. I think it's crossed 500. I think the NSDL, CDSL split is 100, 400, or I think or the other way around, I'm not sure. So I think more to do with granularity of the ticket size and more to do with garnering that kind of interest amongst, it is again, you're trying to target a sophisticated investor who's got a lot of money to lower the ticket size, and then, your corpus goes up, right? So that's one way for you to tap, but I think there has to be more awareness, which is what is lacking today, which is the reason why it's not taking off. Plus, there is some bit of regulatory quagmire, there is some bit of easing that SEBI did in terms of net worth, etc. But it has to become slightly more agile, slightly more transparent before somebody could actually go ahead and make an investment. So I think the whole process has to be slightly more simplified and the awareness to be driven. I think that's where I feel the current bottleneck remains.
Do you see a lot of difference between the way globally sophisticated investors in India? So if you can give 2-3 pointers.
I think it's evolved, of course. In India, I think it's fairly new, right? So that's because we had ticket size restrictions in terms of investments, and you're lowering that, and that's just recently happened, right? So that's not quite the case. Like Amit mentioned, it's Singapore is an evolved market. You have exotic products. Investors are sophisticated. We may have sophistication coming into the Indian markets, but it's going to take some time, right? So that's, you can't really necessarily compare. We're just starting off as compared to markets like Singapore, which are very evolved.
Interesting. So while we talk about investors as a fund admin, see, I've always heard fund admin, but in India, fund admin is not a used terminology. It's fund accounting, RTA, and combined with customer servicing. While all this put together, we don't talk about data. There is a huge data management gap in the way typically developed market works and the way Indian administrators work in terms of the data management. For example, I've always seen during SEBI inspections, people are struggling to download a data the way SEBI wants it. Then there is a quarterly report, people are still struggling to do a whole bunch of work around it because suddenly there is a report change, we don't know how to do the calculations, and there is a problem over there. So Vinod, over to you. You have come from a very evolved market, which is a mutual fund. How do you see data management? How has your experience been in data management? And now there is also a data protection, because at the end of the day, privacy has become a bigger issue than any other issue. I think people would not want to have performance, but have data privacy over and above it, right? So how do you see, have you evolved, and is the fund admin geared up for it?
So, if the mutual fund journey is anything to draw from, I think the AIF journey should be much easier. Okay, I think the level of regulatory override on the asset management side, and on a lot of counts rightfully so, has helped the fund administrator get to a place where you somewhere recognize that every day morning you should expect a communication seeking some data, and you have to gear up to be able to give data. And I think the asset management industry on the whole has done a good job of it. One of the things that I normally tell people about the asset management industry is, this is one industry which probably way back in 2011-12 conceived this idea of a centralized KYC much before the finance minister announced it in 2016 or thereabouts, right? So, and that was a great pilot for centralization of data, and what we see in the context of the account aggregator framework, which we hope will take off sometime soon, is there is opportunity to lighten up a lot of data collation, storage, etc. as we go along. Because data is available, it's just that it is discrete, it is segregated, not accessible, and so on and so forth. The other example that I normally quote, and this is something where I know that Srikanth had done a lot of work on this, is the MF Central platform, and I'm sure many of you would have used that platform. It's such a beautiful platform. If you were to look at it, with the blessings of SEBI, this is something that got conceived for the industry. You give a single instruction, reaches out to 40 fund houses, gets taken care of, right? I mean, and these are probably industry initiatives which I would imagine should get beyond the asset management industry, get to the larger capital market, and probably the entire BFSI space, right? So from a data perspective, I would imagine AIF will probably be a small fraction. Of course, given that data is quite segregated at this point in time, there is always a case to look at aggregation wherever possible. I will just touch upon what I said, I mean, and what Hemal was talking about. I think in India, the way fund administration is looked at is, it is looked at in 3, 4, 5 different pockets, right? Probably there is a case for aggregation of that data. Coming to data security, I would imagine that that's a piece where all of us need to do a lot of work, okay? It's not very natural for many of us who operate in the domestic asset management space, but that's coming, and I don't think the glide path will be a very lengthy glide path, unlike what you had in the Europe on GDPR and stuff like that. So there is a lot of work to be done on that. When it comes to the fund administrators, thankfully, at least my conversations give me the impression that they are ahead of the curve and recognize this is on the way. So there is a lot of work that's already happening in that space.
Thanks, Vinod. In fact, the way you just said, India is actually a very evolved market. The last day I was speaking to a US investor, and they actually cracked a joke saying that India is much more evolved when it comes to centralization of KYC, which means the foreign investors don't understand what a centralization of KYC means and who all have an access, for which there is also a control mechanism of taking a consent. So you rightfully said, we are evolved there, but we are not yet there. So moving on, we are in the last fag of our Aditya. I take the cutoff. So Amit, to you, and we will have the last rounds of questions. Amit, what are the key challenges that you think, learning for all of us, like what are the key challenges you see as a fund admin that you want the fund admin team and the account team to work on?
So I think the industry has evolved in the last 10 to 12 years. It has formalized in the last 10 to 12 years. So it's not a long period. So I don't want to be too harsh on fund admin team and fund administrators. SEBI has played their own role in terms of coming up with their regulations. They have helped the market to develop the AIF segment and all. The fund admin guys have also come up the curve in the last 10 to 12 years. Obviously, there is always a scope of improvement and all. For me, what would be important from a ask or challenges which I see on the fund admin side is, again, repeating the talent. The talent pool has to be super excellent. They should sort of take on the investment managers rather than being dependent, I would say, on the investment manager. So just to put very simple term, in the sense, I can't just leave it to the fund administrators for my activities, whatever they are doing. Still, there is some little bit of stress in my mind, and I can't sleep on with peace in terms of if they are doing the fund accounting, whether that's done properly or not, servicing, onboarding, and all. So simple things, if we put things in proper shape and form, talent, technology, and the techniques, I think then we will have a better ball game to play with.
Thanks, Amit. Hemal, your 2 bits.
I completely second what he said, but I somehow feel fund administrator should first sit across the table with the investment manager while he's onboarding a particular fund. I think as of now it is more reactive than proactive approach. And of course everybody wants to take a market share of business of the AIF which is growing leaps and bounds. But somebody needs to take a step back and say that, look, do I understand the product end to end, and does my technology, or maybe forget the technology, maybe my team, does that team understand the whole product life cycle? I think till such time that we don't get somebody in the India market, I don't know about the offshore market, because what I've been told that of course there is a learning curve for everybody. So that is what's happening in India also. But apparently I think India is always, once you know that there is an opportunity, we go all out, right? And I think that is what KFin is just doing through their new platform. But still, I think there's lots to catch up, in the sense that you don't onboard a client if you don't understand the whole life cycle of the client. Probably to have less business is much better than have more business and create confusion. So I think if your client is not going to give you a certificate saying that, look, I can close my eyes, and maybe if I need to get an SOA, or maybe, if there are some reports, SEBI reports to go out on a timely basis, you guys will be able to do it end to end for me. Otherwise, today what is happening is that you're technically giving work to an administrator, but at the same time you need to have a team within the fund house to basically monitor whether these guys are doing the right stuff, and then point out whatever are the mistakes and then redo things. So I think the whole objective of having a service provider to lighten up your work is still far away from at least my perspective, and there's lots to do for this industry.
Thanks,
I'll just
Hemal.
add to Hemal. I'm sorry, I know I'm kind of overstepping on the line in time, right? I think when I was meeting Shrikant 2 years ago, I did say that the interplay of cost and revenue for KFin or any RTA is paramount, right? So I did say that, like Hemal said, we are an extension. So I look at KFin as an extension to my department. I don't look at it, and I've told this multiple times. I've had some leaders who actually used to manage my funds here earlier. I did tell them that you're essentially an extension of my ops team. So, I mean, I don't make a distinction. And at the same time, the way a player like KFin, they have to become a full service provider, a full stack provider of fund admin services. The margin expansion can only happen if there is investment into technology, because with every incremental fund that you onboard, you can't necessarily add 100 people to your ops team. It's cost prohibitive, and you will never essentially hit your cost targets. So the only way to reduce your cost to serve and keep your unit economics protected is to invest in technology, and I think that's what they're doing. That's where the industry is heading to, because even for a manufacturer, there is only so much expansion possible on revenue because it's finite. AUM essentially is just a vanity metric, right? You are essentially just getting the management fees, and that's about it. And there are no ancillary source of revenue. So, the upside, downsides are defined. It's watertight, so you've got to figure out a way to reduce your cost to keep your margins there.
Thanks, Ajit. Vinod, your 2 bits.
Yeah, so gear up for scale and efficiency. If you're looking at getting to 50 lakh crores over by 2030 or something like that, obviously that's something that has to be done. And the industry has done it in the past. I'm very optimistic we'll be able to do it.
Thanks, everyone. Aditya, do we have time for Q&A? Okay. Q&A for the lucky draw. Okay. Okay. One question? Anybody? Okay, people are hungry, I guess so. So we come to the end of the session. Thank you so much for the panelists, and thank you so much for being a lovely audience. Thank you so much.
Thank you.
Thank you.
Thank you to our panelists for such an interesting discussion. I would like to call Ms. Madhulika Sangvi to felicitate the guests, please. Can we have a huge round of applause for the panelists, please? I would request Ms. Leelavathi Naidu to please stay back. We are moving on. No. It's time to announce our third runner-up from our lucky draw earlier today. I would request you to please pick out a chit and announce the winner. Second runner-up, I'm so sorry. So, the second runner-up wins JBL earpods. Second runner-up wins an Apple Watch. The first one wins an Apple iPad. So I would please request you all, we would be announcing the winners throughout the rest of the day, the other two winners. So please stay back. Over to you, Leelavathi.
So it's Saloni Jain from Omkara.
Congratulations, Saloni. You win JBL earpods. Saloni, can we have you on stage, please? Also, we have a quick regulatory masterclass by Shikhar Kakkar and Rahul Jain from Khaitan. So, and post that, we'll break for lunch. All right. Thank you, Leelavathi, and congratulations, Saloni, for winning JBL earpods.